Once we've identified support and resistance zones from the daily and the weekly charts, and we've spotted a potential trade on the lower time frame, like this example, prices comes up toward your level of resistance, you look for a manipulation of some sort, that would be your first trading opportunity based on the idea that you are taking your trade here at your resistance level, targeting all the way down to your support level. So this is your first trading opportunity. And if we were to trade long, prices were coming down into this level, hits the support, creates a manipulation, and our target then is up here, our resistance. So based on that trading idea, this would be our first opportunity to buy. And based on the idea that we are trading short to this support level, that would be our first trading opportunity based on that idea. The next step while looking for our second trade short in this example is to analyze the way prices has moved up toward our zone. Remember, our first trading opportunity was there after the manipulation. That was our first trading opportunity. Now, for the second trading opportunity, we need to analyze the way prices has actually moved up toward the level. So we need to see at least 5 waves up so that we are able to connect the 2 points and draw a valid trend line. Now, the reason we do this is because our second trading opportunity will be after the break of this trend line, and we need to identify a valid trend line connecting 2 points. So if one of the Elliott wave rules are broken, then it becomes very difficult to connect any 2 points and to draw any valid trend line. So in this example, the second wave should not breach the start of the first wave. So prices are moving up, that's our first wave, and then prices in our second wave comes down and it breaches the start of the first one. So this is a nullified trend. In this case, it would be very difficult to connect 2 points. And in this example, the fourth wave should not breach the territory of the second wave. So prices goes up, creates the first wave, second wave, and then the third wave pushes up, but then the fourth wave comes down and it breaches the territory of the second wave. So there is another example of a nullified trend. We cannot connect the 2 points here. It's going to be very difficult to connect 2 valid points to confirm the trend moving up toward our zone. So there's no reason to look for a trend line break here if there is no valid trend in the first place. So once again, we need to see 5 legs going up so that we are able to draw a trend line with 2 points. If we have only 3 legs, then again, we cannot connect the 2 points. So the move up toward the zone is not a valid one. So looking for a trend line break here doesn't form part of the strategy. So if we put the trends under a microscope to analyze it further, and according to Elliott wave, we are looking at this third leg here. It's often the longest of the motive wave legs here. So the first wave, and then we get a correction, and then we get the third wave, and then a correction, and then the fifth wave. So the third wave is often the longest. So this is a tick. This is a valid trend. And you can see we can connect 2 dots here and draw a trend line. In this example, wave 3 is shorter than wave 1 and wave 5. So this is not a valid trend. So if you draw the trend here, it's going to be very difficult when we start getting our trend line break closer to our resistance level on top. This is another good example. Wave 3 can be shorter than one of the motive wave, but it can't be shorter than both. In this example, the wave 3 is shorter than wave 1, but it's longer than wave 5, so this is a valid trend line. In trend line analysis, we are looking for trend weakness. We study the general health of the trend. The reason we do this is to spot the first possible trend line break. So we can use some tools here to help us identify the weakness. The 36 EMA and the 12 EMA, they're moving closer to each other and they finally cross, and then this could act as a weakness in the existing trend. In this example, the downtrend comes to an end soon after the EMA crosses. We can also check the health of the trend with the RSI Divergence. When we see prices are making lower lows and the RSI fails to do the same, then this could be the first opportunity for a trend change. We can also use price action, momentum based on Dow theory, to detect weakness in a trend. In this example, the preceding leg is always shorter than the next. In other words, the legs or the waves are getting longer. The sellers in this example are getting stronger after each pullback. Sellers are able to push prices further down than the preceding leg. It's only here on the last of the waves that we notice that after the pullback, the sellers were unable to match the strength of the previous leg down. So this apparent weakness could signal a trend line break. We can also use Fibonacci to analyze trends for weakness. This momentum-based technique measures how deep the pullbacks are on existing trends. So in this uptrend, we see the pullback comes in at 50% of the move up. And on the next leg, we see the sellers are able to push down even further. Sellers are able to push down to 61.8 this time. So the sellers are getting stronger and stronger as the trend is going up. And then here on the final leg, prices are going up. And then the sellers are able to push all the way down close to 78.6 and even further. So the sellers are getting very strong here. And then the final push up, and then we can see that there is a potential for the trend line to break as the trend becomes weaker. Sellers are able to push further down and the trend line breaks. So the reason for trend line analysis is to spot the first possible trend line break. And then this in turn leads to our next possible trade. After our first trade here, remember, our first trade would always be based on an excursion beyond the mean at the resistance or support levels. And then after a trend line breaks, then this is our next opportunity to trade long based on that idea. This here is our first break, pullback. And then we have another break up and another pullback. And in this example, prices are pulling back toward the 12 EMA for another trade opportunity. Always targeting the next level up.